On this video, I'm going to explain to you how to use trend lines in order to assess our direction, our trend. So let me read you all this, and then on the price chart we will go through all these rules, and you will understand clearly how powerful the trend line is to filter out the levels and our trend. There will be many times where the trend line will invalidate levels that will work really well, but as I said, it is not mandatory. I use it a lot, trend lines. I use them in order to filter out the levels because it is a very mechanical way of filtering them. So if you miss good entries, it's not a problem. I mean, but I'm sure it will prevent you from taking a lot of bad trades. Okay, so let me read all this, and then we will go to the chart and we'll explain it more carefully. The trend lines will be drawn always on our entry time frame to assess direction. That is the time frame where your orders will be placed, the execution time frame. Okay, but which is your execution time frame? Because you may be a scalper, you may be an intraday trader, a swing trader, or a position trader. So what I do is I draw trend lines on all higher time frames areas and my entry time frame. For my entry time frame is a 4-hour chart, so I draw a trend line, and then I will see, like here, that I've got a trend line, a downtrend. So this is on my 4-hour, but this trend line is on my 4-hour. Okay, this is a trend on my 4-hour. But if I go to the daily, I could have another trend on that time frame. It could happen that we had an uptrend. So on the daily we have the same thing. On the daily, in this case, we also have a downtrend, as you can see over here. And look how it is respected. See, to the peak. So it happens that we have the same trend, but there will be many times where on the daily we have a downtrend, and on the up 4-hour we have an uptrend. So here, for example, as you can see here, this is the downtrend on the daily. But on this area, if we go to the 4-hour chart, this won't be a downtrend. It will be just the opposite. You see? Look at how the trend line is being respected to the pip. So even though we have a downtrend on the daily, on the 4-hour we have an uptrend, and that happens a lot because on the 4-hour we are going to have an uptrend, which will be a correction on the lower time frame in order to reach a higher time frame area where price will revert to the mean and will keep on dropping because the trend on the daily is down. Look at this. This is our daily. This is our trend now. Okay. Let me draw it. This is on the daily. Our trend is down over here, and this is down on the 4-hour as well. But look at what we have now here. Look at this. We've got a CP pattern. Look at this. It's beautiful. Look at this. Drop, base, drop. It took out all these areas, this support area, this demand area, everything. So now price has dropped. This is an original level because this is not a retest of a previous level. We look up and left. It's another lesson I've recorded, and then it is fresh because we have broken down and price has not retested it yet. This was, sorry, this one candle tried to retest it, but it didn't make it. After a few days, it retested the daily area, and then it dropped. So on the daily trend, on the daily chart, we've got a downtrend, a clear downtrend, because we have this daily area over here. Okay, right there. Look, down, took out this CP pattern, and then retested and dropped. We've got another level over here, retested and dropped. And this was the second 30 test. We wouldn't trade that one, and then dropped. CP, drop, retest, and drop. That's the way it works. This is a daily chart, okay? And this trail line is telling me that I just have to sell. I have to sell. If price breaks above with a full candle, as explained over here, okay, trail lines will no longer be valid once a higher time frame has been reached. Well, that's another thing. Be solidly broken. When a trail line is broken with a full candle here, a sell setup with a descending trail line, like now on the daily, will be invalidated or negated when we have at least one full candle open, close, high, and low above the trail line. So when we have a full daily candle right above, not just a spike or the open or closing price above, no, that normally have fakies. We need this. If we move the trail line like this, look, and now see the difference. This is a full candle away. This is not a break of the trend line. This one, yes, because we have the open, the close, the high, and the low. All four features of a candle are above the trend line, so that's broken. But it's not the case because the trend line is being respected perfectly, like this, as you can see. This is a daily. So look at how we use. So the daily is down. So if the daily is down, I just want to sell daily levels and all lower time frames as well. I want to sell the 4 hour. I want to sell the 1 hour. I want to sell because the daily is down. If we use the combination, the daily 1 hour combination, we will be selling areas of supply on the 1 hour. We can do it also on 4 hour. It depends on how what your trader personality is. Mine is the 4 hour. I use 1 hour sometimes, but normally 4 hour. But we will discuss that on another video. The thing here is discussing how valid, how good a trend line can be. How can we use the trend line in order to assess the direction? As you can see here, on the daily chart, we have a downtrend, clear downtrend, and we saw how these levels have been removed, like here, and this validated this level. This was removed, then now we can sell. We can sell, we can sell. Okay? This even was a short here that produced 350 pips. Okay? Then it rallied, there was no level over here, doesn't matter, and drop, remove the CP pattern, and then rally another trade. And this was a trade as well. A rally based on a drop, remove these areas, and then this is the entry. Okay? A lot of opportunities on the daily, as you can see. Just the daily chart. We don't use the daily chart for our entries unless we are doing a combo of monthly daily for our position trading. We are using a combo like the daily 4 hour, the 1 hour, or weekly 4 hour in order to go and trade our to make our trading. So we were here. The daily is in a downtrend or on an uptrend. So I want to sell all valid supply areas on the daily. But since the daily areas are too wide, this one is 300 pips, I'm not going to risk 300 pips because that's too much for too much dollar risk for our entry. And the trade was 300, was like, well, kept on dropping, and would have given that person a lot of money there. Now what we use is we drill down these levels to the 4 hour, which is our entry, and we'll look for levels over here, but that will be another lesson. I'm just trying to assess, to show you how to use the trend lines in order to assess direction. We have to connect two obvious picks in order to assess a downtrend. Two obvious picks. Do not draw trend lines on the first picks that you see that are not good. I mean, you will see peaks and valleys everywhere. You need to look for obvious ones, and this is one of the other rules. Trend lines will be drawn when we have two obvious valleys, uptrend, or peaks for a downtrend. And do not, okay? We will not use continuation patterns to draw a trend line. We won't use a continuation pattern to do that. So we are not allowed to do this. This is a valid pick, okay? I won't do this. This is not valid. It's too steep. I mean, a continuation pattern is just that, a continuation pattern. We need to use the valleys and peaks because they are the reversion to the means, where price will be injecting more capital by the big players. So we need the continuation patterns are so strong that price will not reach to them, and those are continuation patterns. They are not the reversion to the mean. So like I said, so they are not valid in order to draw the trend lines, because if we do that, you will never get a trade. Very, very rarely. So since we don't have a peak, an obvious peak, we won't be able to do that. Okay. So this is our trend, still here. As you can see, daily is down, 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 and this is our trade. But if we look lower, we zoom in, what do we have on the 4 hour? On the 4 hour, we have this. Oops, it shows the wrong tool. On the 4 hour, we've got, what have we got on the 4 hour? We've got an uptrend, but that doesn't mean anything. I mean, this is an uptrend, perfect. Maybe what we have done here is we have reached a higher time frame demand area on the daily or the weekly. Our price is just reacting from that lower time frame area, which has been already touched and shouldn't be valid for a second entry. So that's what price is doing. So now we've got here all these. There were entries even entries over here. As you can see, this was an entry, almost an entry. Yes, this was not an entry because it didn't make a high, but here almost an entry. Price is reverting to the mean, and where is the mean? Here. This level is not good for set and forget, too much trading in the area. Here, look, not good. This whole area is the daily supply area that we have right there. This in yellow, which is here. Let me change the indicator properties because normally I don't use the white backgrounds. So let's use a rectangle read indicator and then place this as black, both the upper and lower color, so that price seems better. Yes, like that. So now, yes, this is a daily area. You see, there was an area over here that if you have taken it, look what happened to that area. It would have been a loss. This is why we have to assess the validity of the levels. Look at how many candles, 1, 2, 3, 4, 5, 6, 7 candles. And that goes against the rules. We want maximum 6. This is on another video. So that prevented us from taking that trade. Okay? This level is not good. I mean, this is too wide, 200 pips. So we have to wait for some kind of confirmation right here for our entry. But that's the purpose of another video. But as you can see, this wouldn't have been a trade because of that. No, so now what we were looking at is that these over here, let me make it touch so that we can see if these levels is a reaction to a previous higher time frame area. So let me zoom out and see over here, it is not a reaction to any area on the daily. But let me see if this is a weekly, the whole area. Oops, sorry, let me do this. Right there, as you can see, is a weekly area. Drop, base, and rally. So if we have a weekly area over here, it's too big, but it is a weekly area. So what do we have to do? We can't, when we are there, we can't sell. We shouldn't sell into an area of a higher time frame area. This is not allowed, forbidden. What we have to do is wait for that area to be, for that area to react and let price revert to the mean to a higher time frame supply area. Where was the higher time frame supply area? Right there. See here. This is the whole area on the daily. So price reverted to the mean, to the previous valid higher time frame supply area, which was on the daily. And look what price did. Price hit that area right there, which is that one on the weekly. So that's why we want we have to know where we are on the higher time frames on the weekly and the monthly. It doesn't take much. You just draw the zones on the weekly and monthly areas, and they will be there for weeks or even months, because it takes a long time for those areas to be reached and to be taken out. So this is crucial. So what happens there? If I am here and I have hit a higher time frame supply area, demand area on the weekly, I am not going to sell here. I am not going to sell there. Okay, I'm waiting for a reversion to the mean. And look what happened here. Look at this. This is an old support area. So support becoming resistance, demand becoming supply. This is a flip area. So if on a flip area we do have a nice pattern to trade, then we will trade that one. That's why. You could have traded, I would have tried to trade this one, as you can see. Okay, this is a daily demand area. But look at this, it was retested here. If you tried it again, it could have worked on the lower time frames, 100 something pips. This could have been an entry, maybe, but it didn't work. It would have been a break even, or maybe a 3 or 4 to 1. It depends on how you trade. But I wouldn't have traded this one because it was retested. I would have waited for the upper one. But that's the matter of another subject of another video. A lot of practice. So as you can see here, since the market is closed, I'm having problems now with all these zones. This should be on the weekly, not the daily. Right there. Exactly like that. So that's the weekly. So in the indicator, I will go to the weekly now, and I will change the style. I will make it also, I will make it red, for example. So we know that there are weekly areas. Right there. So look what happened here. We are on the daily, we are in a downtrend. On the weekly, what do we have on the weekly now? We have a downtrend as well. We have a downtrend. This is on the weekly. So now on the euro, we have a downtrend on the weekly, we have a downtrend on the daily, but on the 4 hour, we do not have a trend. We will have a downtrend. We have an uptrend. And what does that mean? That since we are using our entry time frame, which is the 4 hour in this case, in our combo, it will always be counter trend. If we want to sell, it will always be up to in an uptrend. If we want to sell, that will be always. So we have like a sequence over here. We've got a weekly down, daily down, and then our 4 hour is up. So we wait patiently for a nice area of supply to sell. As you can see, this area didn't work. This one didn't work because we were too close to the supply area on the demand area on the weekly. Sorry. So this didn't work. I wouldn't trade this one. I wouldn't trade this one. This is a retest of this one. This is a retest of this one, and this is a retest of this one. So where should I trade? This is a retest of this one. I'm too much trading on the candle. This is a retest of this one. So look at this. All these levels here are retested. So there is no fresh level to lean on. And as we could see on another lesson, when we have a trending market, we always want to use fresh levels. Always fresh. If it is original, it's even better. And if we want to counter trend, we want original levels in order to counter trend. So we have to look for original levels if we want to counter trend. Okay? So look at this on the 4 hour. When we were dropping, we did have this trend. Can you see? Downtrend on the 4 hour. It's the previous trend. Let's make it like orange. Okay? This dropped. Okay, and we had some entries. Over here we had an entry, over here we had an entry, filled and fill gap, drop, and then rally and drop, and then was an entry. There was no level over here. This was the level, and this was the entry, as you can see. You see? So the thing is that by just looking at this, we see that the 4 hour was on a downtrend, the daily was on a downtrend as well. And now we have broken that. This is trend is solidly broken with this candle, full candle, the high. the close, the open, and the low above the trend line. So we are broken that trend line, that downtrend on the 4-hour. But we are still on a downtrend. Look at the daily, look at the weekly. We are in a downtrend, so we are not. We shouldn't buy. Sell. We shouldn't short because we are bouncing from higher time frame demand areas right here. We are bouncing from there, so we are not allowed to sell. If anything, we would be allowed to buy until we reach a higher time frame area, which is original, in order to sell. So what do we find here? We find an original level of supply on the daily, and that we are allowed, and it is underneath the supply area, as you can see. So this is tradable. If we look at the 4-hour, which is our anti-time frame for swing trading, look at this. Can we short on this one? Okay, no. Why not? Because that level, okay, is a reaction to this one. Draw a horizontal line at the top. Look left and up. We stop here. We don't pass through candles. This is a valid level of supply. Yes, it is a valid level of supply, so this is not fresh. So if we have broken the downtrend and we are too low in the curve, you see the weekly right here, we are not allowed to sell unless we hit a higher time frame area sorry, and on our entry time frame a fresh and original level. This is not, there's no higher time frame areas over here. This is not, it is up here, fresh and original. So this is not fresh, it is a reaction to this one. This one level over here was good when price was dropping, and we had a downtrend on the 4 hours, you can see, and it dropped. But then we reached the higher time frame area, and then we are negated. The shorts are negated, no longer possible. Was this good for trading counter trend? It was not fresh and it was not original. Why not original? We draw a horizontal line over here at the top, at the highest high of the level. This is the line, and it is a reaction to this level. In fact, this was the trade for this. It unfilled, not original. It is not original, and it's not fresh either. We want original levels. So we continue. This is another level. Remember that we are now counter trend on the entry time frame. If we want to trade counter trend on our entry time frame, we need that this level is original. Is it original? No. It is a reaction to this small CP pattern. So we can trade it. We go to this one. So this one, is this valid? We've got more than 6 candles. It is not valid. Is it fresh? Yes, it is fresh. But is it original? No, it is a reaction to this ugly level. So we don't have any trade here. We don't have any possibility of selling the 4 hour. And if we had tried to sell, we would have lost many trades. We could have traded this one. It was the second retest, and it worked. Okay, it worked. But it is not a valid trade. We have to wait and wait and wait, because this level was very close to the higher time frame area. And when we reach the higher time frame area, as you can see over here, this is the daily zone. Then price reacted and removed everything down there. Now the trend line to the upside on the 4 hour, which was the rally, the reversion to the mean on the daily here, as you can see, it reached this area of supply on the daily, and that was the area. Remove this. That was the entry. Now, right there. But the daily is down, the weekly is down. What we have to do is sell. Sell and sell and sell. Because no matter if we use what combination we use, we should be patient enough, because both the weekly and the daily, probably the monthly, let me see over here. Look at this. This is beautiful. Right, this is the line. This is downtrend. And look where we are. Look. This is why multiple time frame analysis is just great. See? Look at what price reached. What price did. It reached the monthly, fresh monthly supply, and price rebounded. So supply was in control. Look at this. This is the monthly area seen on the weekly. These trend lines painted by the automatic indicator. So this is beautiful. And now this is the daily. And you can see this is the daily reacting to a higher time frame supply area. This is a combination, the daily, monthly. If we hit a monthly area, like here, okay, we have to sell all daily supply areas because that's the combination, daily, monthly. The monthly is our trend, the big picture, and the daily is our execution time. We can sell this because we have removed this, but price didn't make it. We've got a level over here. We could sell. It worked. This was another level. This was a valid level of demand, but we are not allowed to buy because we are bouncing from the monthly supply area. So this level is not valid to buy. And now we rebound a second time from there. It worked a little bit, but this is not valid. We have to sell. See here, a level, a rally, a base, and a drop, and then a rally, a base, and a drop removes this area. Then here we have another trade, and then the extreme. It worked like charm because we are on a higher time frame area. This is the monthly, and when we hit the monthly, what happens to the lower time frames on the monthly? We start creating supply areas on the weekly, like here, here, and here, and here, and here, and here, and here. So weekly, and on the daily, the same thing. All daily supply areas because we are bouncing from the monthly area. And what happens to the price when hit monthly area? We drop until we reach to the extreme of the curve, which was this one. From monthly to monthly. And price is bouncing from the monthly, so monthly is in control. But we are still in a downtrend. No, not in a downtrend right now. We are consolidating, as you can see, because we couldn't remove any of these areas. So now price is bouncing from monthly to monthly level, like this. So now we have room to reach there. So price will probably drop on the euro right there, or even a little bit lower, and it will probably continue rallying, probably, maybe not. Because now this is not a monthly supply area because it hasn't removed any previous demand area. It hasn't even made a lower low. So it is not a valid area, so it could probably absorb this area, even though we have here a speed bump or CP pattern, continuation pattern, that is rejecting the price. So it could drop, but I think it's gonna continue rallying higher. So we have the weekly and daily with us, so we can sell on 1 hour and 4 hour because the combo is weekly 4 hour, daily 1 hour. We can use daily 4 hour, daily 1 hour as well. It depends on what type of trader you are. So, but you can see how we connect this with the trend line. So on the daily, we are down, 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 and then this was the valid trade as I explained. So now that price has reached that area on the 4 hour, this trend is no longer valid. It's broken. Let me remove these areas. It's broken. So now price reacts to that area, which is the extreme of the daily continuation pattern, but there was nothing there. We had a level over here, price didn't react, and then we created another level over here. A drop base and a drop. But price didn't retrace to that level. So now this trailer on the 4 hour is not valid. It's not valid because we don't have two obvious peaks in order to connect. When we have an obvious peak, it's right there. Okay, right there. And then we can do like this. This is a 4 hour there. So this is a valid area to short, but we cannot use this. We cannot do this. This is not silly. I mean, we don't have any previous value. We don't have two values to connect. So what we have to do is we have to sell all levels of supply underneath this trend line, because on the daily we are in a downtrend, on the weekly we are on a downtrend, we are rebounding from our monthly supply area, and that's all we have to do, sell. So what do? We'll start looking for levels. This is not a level because it didn't remove this area. This is not a level because it didn't remove any demand area. Nothing happened here. This is not a level. It's not a level. This was the level. Okay? This was the level. But did it produce short? No, it didn't. It didn't pull back to it. Oh, no problem with that. We have to continue drawing levels. We've got a level over here. This is the whole area. And that one did produce an entry. That was the level. And now we have this. This is the trend line on the 4-hour. So we have to look and trade all levels over here. And now, since we have made a lower low, we have absorbed this area. Now the trend line is not like that. Trend line is like this. We are connecting the highs, like that, which has taken this area over here. Now, this is a trade. This is a, I mean, not a trade. This is the trend. This is the trend. So here we've got a level, as you can see, and it worked. But would have been a valid entry? No, it wouldn't. Why not? Look at this. This is the demand area on the weekly. So we can't sell when we are on weekly demand area. Look at this, where we were, right there. Exactly, we were at the entry point, we were right there. So let's see where we are on the weekly. Right there. I am not going to sell there. As a rule, we cannot sell when we are low in the curve. We are not going to do that. So once we are this low, we have to wait for something else to happen, for the areas of supply demand being taken out. Like this one was taken out. Now that this area of supply has been taken out on the weekly, we are allowed to sell again. Look at this. This is another supply, something like this. Another supply area. It has taken out this area. So now what we have to do is be patient and wait until we reach the higher time frame areas, and we can sell again. But what happened there? Now, look at this. What happens to price? Now that we have this area, this valley on the weekly, see, we hit this demand. So, and this is supply. So, do we have room to trade from weekly to weekly? Yes, we do have room. Like we have like 600 pips. So what we can do is using the lower time frames, our X time frame, because we are low in the curve. This is the extreme, and this is the higher area, supply area. So we have room. So we go to the 4-hour, and then we can trade from. Let me call this from this area. Right there. When price starts rebounding from there. So price rebounds from that supply area. And now, okay, you can see here, this is one of the rules on the PowerPoint. If price hits a higher time frame supply and demand area and it starts rebounding, when it just hits, the new trend line can't be painted until we have 2 peaks. And also, trend lines will no longer be valid once higher time frame has been reached. A higher time frame is the daily, weekly, and monthly chart. We expect prices to react from those areas, so the trend line is no longer useful or valid again. This was the trend line. Okay. So we reach this area. What we do is this trend line is no longer valid. So what we have to do now is to look for imbalances of demand in order to trade. So here we have reached this area, as you can see, and once we have hit this area, we break higher, and this was our first entry on the 4-hour. See, 35 pips and then 180 pips. Depends on the trade management. Well, that's another lesson. Okay. So now, since we have traded from this area, we are not uppercase allowed to trade a non-fresh level. Our rules are always the same. We only trade fresh levels, no matter what direction we are trading. If we are trading counter trend with the trend, always fresh level. This level is not fresh, then it is not tradable. Only first pullback, higher probability. That's all. Sometimes level will resist, will hold 1, 2, 3, 5, 7 retests, but you have to have rules. Our rules are 1 retest. The second is not. Once we hit this area and we broke low and we have traded the area, this area is no longer valid unless we have another area over here where breaks higher, break higher, and then we trade those areas, fresh areas with the trend on the 4 hour. And because we are low on the weekly time frame, then we are allowed to go long on 4 hour until we reach a higher time frame area, which is the weekly up here. So we have the weekly from here to here. This is good thing about the rectangle indicator. You are in the 4 hour and you know where you are at all times. So since we reach a higher time frame area, now this is our first trade. We are not allowed to buy here anymore. We have to wait for a retest, a lower penetration. This is another rule. If our entry within a higher time frame supply and we get a loss or a winner or whatever, and we want to sell, in this case, to buy within that demand area, in this case, we need a higher entry or a lower entry. I mean, price lower. This is the opposite. Unless price rallies, in this case, lower and forms a new area of demand, absorbing supply. This is the opposite. I mean, this was an example, and we are on the opposite. So this trade was okay, and now this trade is not okay because we have already traded it. It's fresh, so no longer allowed. Okay. Now we do have this. We have this level of demand right there. The whole area is like this, and nothing happened. So now this is a CP rally with a gap. Okay, but nothing happens. So now we have another rally, and this one rally, but this one didn't take this area. I wouldn't be so comfortable of doing it. I wouldn't trade this one because it breaks one of the rules. It is not a level of demand because it hasn't taken any opposing area. So I don't like. Unless if we had a lot of room, if this level was like up here, then I would trade this one because there is no resistance over here. But resistance is so close. This rebounding from this one, and look what happened. We have dropped lower. So this is no higher probability because of that. It worked, but no matter. It doesn't matter. So this is another area. This one just broke. This area was a decision point, but this area was broken. So now we can trade, but price didn't make it there. So it was not a trade. This was the next level. Didn't trade, didn't work, or didn't pull back. So this one, no level, this one was a level. Now we can connect this trend line. We have several peak valleys there. Well, this is what we have right now. And here we have this, another level. And look at what happened at the trade. It was too high. I mean, there was no opportunity for us to enter the trade on this 4 hour chart. It's a pity because there were a lot of room to reach to the opposing area. That's a pity, but that's how it works. That's how it works. Well, let me remove this one. Let me remove this one. Sometimes there will be like 3-4 opportunities. Others we won't have any opportunity, and others we will have one opportunity right at the top, and that's too high. So when we are right here, so high, we are not allowed to buy anymore because it's lower probability. Okay, unless price goes lower. So stays away from the higher time frame. So this is a trend. This was a trend. So we were not allowed to buy here. That was a level over here. It reacted, but I don't know if we have a daily area over here, then we would be allowed to buy. But if we don't have a daily area, we are not allowed to buy because the trend line is not allowing us, is negating the trade because it's being broken solidly, as you can see. But now what we have to see is this. Okay, before we have reached there, what happened here? I was missing this. Look here. We reached the higher time frame supply area now. See here? This is supplies so on the weekly. And what happened there? We have this level over here. The whole area. This one it didn't work. We didn't even provide any trade, and then this was a CP pattern. And this was a trade. Dropped. And then we've got another CP pattern over here. But I wouldn't have traded R1 because it's too wide and the the departure was not good. I didn't have profit margin. So even though it worked, and now price has dropped right here. We've got a valid level to buy, but is it valid to buy on the 4-hour? No, it is not valid because the 4-hour trend has been broken. Trend line, you see. But let's see if this area, there's a higher time frame over here. Could be a daily area. A lot of candles over there. Oops. Let me draw our vertical line right there and see if there is something there. Yeah, right. There is the CP pattern. Right there. So this is a valid trade. Why? I'll tell you why. Because of that. Now look at the daily. We were going higher, and our trend was higher, and we couldn't draw a trend line. But the thing is, we have hit a higher time frame supply area. We are bouncing, and we've got a level over here. And we need to know. Yes. See the daily. So we have this untested level, and since we have reached a daily supply area, higher time frame, this trend line, okay, was something like this, was no longer valid. Remember the rule: once we reach a higher time frame area, we expect that area to react. So it is no longer valid. So this trend line is no longer valid. And we look for fresh areas of demand and original areas of demand. Why do we have to look for original areas of demand? Because on a counter trend on our entry time frame, we always use original levels. We do not lead on non-fresh areas. So do we have an original level? Let's see. We draw a horizontal line here. Is it a reaction to a level? No, the level was down here. So this is fresh because we look right and down and up and down and right, and this is fresh. So this is a trade. It is original, yes, it's not a reaction. So it complies with the rules. So this was a trade. And so we are now bouncing from a higher time frame demand area, and this supply area is already tested on the weekly. This area is not tradable, this area is not tradable, this area is not tradable, this is a reaction to this, this is a reaction to this. So all this is compressed supply, so we are not allowed to sell there because we are bouncing from here. We are here we are in the middle of the curve, we are too low, we have to buy. And this is a trade. And now we've got another trend line possible over here, more or less. Like that. There was no trade here, nothing here, nothing, price is rallied. And then we have this. This is a CP pattern. And what happened now? Now the trend is broken. See? The trend line is broken. Now we are again within the weekly supply area, which is from here to up there. So are we allowed to buy? No, we are not. The trend line is negating us as well. But even though it is negating us, it's good to have it there. We are in a higher time frame supply area weekly. We are not allowed to buy anymore. We can't buy here because we are within the weekly supply area. And if we want to use the trend line as well, even though it is not necessary, because we are the rule here tells us that the trend line will no longer be valid once a higher time frame has been reached. So this is not valid. But so we have two rules that negate this level. We are too high in the curve, and the trend line has been broken. So no trade over here. So what do we have right there now? We remove this area. It shouldn't be even painted there, because it is not a valid area of demand. Otherwise, it will confuse you. So here we've got a level of supply right there. This is a CP, and it made it. It dropped. Now we've got a possibility of drawing this trend line from here to here. Obvious peak and obvious peak. This is a CP. We don't draw the trend line with the CPs. So what we do is selling this. This one would have been a loss, right? This one. Why? Because since we don't have the possibility of drawing any trend lines, we don't have two obvious valleys. I would have done like this. This would have been my level. and a loss. But then I have to try the second level. This one is valid. It's a valid level. Then this one would have been a winner. That's not a problem. So that's why we have to take all levels that are valid. This one didn't work. Doesn't matter. We had another one that worked. So now look at this. We are not allowed to sell. Not anymore. So look at this. This trade, even though it worked a little bit, it was not allowed. It wasn't allowed. We were allowed to buy. Because now we had this. And the opposite. Since we have the opposite, we are lower, we have stayed away from the supply area on the weekly. Now we are lower and we are reacting to this area, but well, this was not a trade. That was our original trade. Remember the daily area and all that. Okay, I'm just improvising all this. So this is the way it works. We will see. So now we have hit this area. We haven't hit this area, but we can't trade this area. I wouldn't trade this area. Okay, but now it's trading higher, and then there was a level over here. Since this trade higher, right there, but I wouldn't have taken this trade. It's a valid, but it didn't make a higher high over here, so it's not a valid trade. It doesn't matter. It is not a valid trade. Okay, even though you see that it works, but according to the rules, it didn't make a higher high over here. So it is not like a double top over here. This is not a valid trade. But now we have a trend line. So what do we have there? Now, finding over shorter level by not a problem. We have a 10 pips wiggle room. So that was the level, 300 pips. And then look at this. Look at this. This is a very little nuance. This looks like silly, but look at this. Rally based on rally, and then it reacted. This was the level right there. We have two dodges, but we have this basic candle. If we only had two dodges, this level wouldn't be a tradable area. But since we have another basic candle over here, which the high candle range is like 50% more or less, we covered the whole area like this. And look at this. Did it make a higher high? Yes. It even removed this one. Okay, so this trade is valid. If we refer to the rules of how we should draw the levels, we have a single doji candle, no base. We have only doji candles, no base. But we don't have just two. We have three candles in the base. 1, 2, 3. And it made a higher high. So this is the whole area. You could have said, okay, I will draw it like this, but this is not valid. This is the whole area. So we are following now this trend. But now, see, you hold this trade, and then look at this. What happened here? We have reached again the supply area on the weekly. We have removed this area already. This is a fake breakout. And so again, the trend line is broken. So now the trend line, since we have reached the higher time supply area, is no longer valid. And now all these levels that we had there, since we are bouncing from the supply area, are no longer valid. Even if they are, see, this is retested, but we are too high. It's not possible. Look at this wiki area. This is retested. It was no longer valid. Couldn't be painted there. Shouldn't be painted because it's not valid. Not valid because it was even over short, as you could see. So it was retested and it was our entry. This is not valid. It is retested. It reacted a little bit and then it was broken after the second retest. So now that we have a trend line possible, see here, now and we do have a trend line again on our entry time frame. We are using the weekly and the 4 hour. If we use a daily and a 1 hour, we would have other entries, more entries, I'm sure. So here's the 4 hour. No, the whole consolidation area was could have been an entry here. Long lived, it could have been, yes. So now we have this supply area. So is this supply area valid or not? Now, this supply area was there. Look at the big imbalance you have there, okay? And it dropped lower. We're waiting for that area to short. What happened to that area? It was broken, but was it valid? No. Look at the trend line. One candle. This one candle negates the trade because we have one full candle broken here. A sell setup with a descending trend line will be invalidated when we have at least one full candle open, close, high, and low above the trend line. So, no trade. You would have had a loss for sure. So now we are lower in the curve, as you can see over here, over there, and now we have the possibility of going higher. We've removed this area of supply right there. So here we have a level. This one was not a level, an entry, because we didn't remove anything. So here we had this is removed. Here we have a level. Here we have a value based on a rally, and we made a higher over here. So this is an entry right there. This is an entry, more than 100 pips. Why is this an entry? Because we don't have, so this was a valid entry. You see? But now we have reached the higher time frame area on the weekly. We are not allowed to buy anymore. Right now, no, this was our first trade, so this trend line is negated right now. This level is negated because it's already fresh and it goes against the higher time frame supply area, and this level is negated because that reason as well. It is this trend line is broken, so all this out. So you see how the trend line helps you to do all that. So now we've got it's hitting again at the pip, the weekly supply area. Now we've got a level over here. No entry. CP, no entry. Let me remove this one. It's ready, not valid. Now let me see. There, right here. Now we got this area, supply, no entry. Nothing here, CP, nothing here, no level, no nothing here. See, drop base and a drop. Right there. This is nothing, too much trading in the area, no imbalance, no extended range candle. Now this is it. As you can see, these two area lines are the daily. Okay? And what happened to the daily? Oops, where are we? Right there. Lost. I was a bit lost. I mean, this is the daily. Since this is not live, this is the daily over here. So this was the daily. And look what happened to this daily now. After so many hits of the supply area, remember that on the weekly we are down, on the daily we are down, etc., etc. So this is holding, and now it finally broke lower. So now that we have broke lower, that area of demand, which is here, see what happened after this area of demand is broken. This is daily, brand new drop base drop. This is a CP supply. This is a hit. We dropped. Now we got another level over here after that, and then we've got another CP over here with Mariposa candles. But what happened there? No entry, no entry, and then we've got another level over here, another level over here, but no entry at all. And what happens now? See this line over here? This is the monthly demand area. Right there. So are we allowed to sell over here? Let's look also at the trend line. So we could have this trend line like this. So are we allowed to buy? No. To sell? No. Look at this all compressed area. So now we have hit the monthly supply area, which is all this. Let's draw this. So we have hit a monthly supply demand area. So now we've got this level over here. We can sell. I mean, this trend line is negated already. Why? Because we have hit a higher time frame area, which is which are daily, weekly, and monthly out. So this area is no longer valid. And now we got this area of supply on the weekly right there. So here we could have had an entry, no pullback. We have a rally, a base, and a rally. This is a CP. And the whole area of consolidation is this. As per the rules, another video, watch it. Rally and broke higher. This is all compressed, no good. So, right higher, 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 and higher. This is not a good level of demand. Look at the candles. It's not good. 80 pips. So it reacts, but it's not good. Not good. Now we got this other level. See? Drop, base, and a rally with a gap. Until another level. Broke higher. It hit our supply area right there, our CP pattern, but that CP pattern, it goes against the trend. Because the trend, if we had drawn it at this, came from higher, we had already broken that trend on the 4 hour, and we are bouncing from supply on the demand area on the monthly, so no longer valid. So even though it worked, okay, but we are thinking of going long, not short. We have to go with rules. Even though it worked, you could have said, okay, I will take this from there up down here and then rally higher. I will do both directions. I don't think you could do that. So you have to, the monthly supply demand area is telling you to buy. So you have to buy. So we have this, and now we have this. Look at this. Remove this area, and then we've got another area. Here it is. Now we got trend line possibility. Bye-bye. So this level is tested already, so no longer valid. If you wanted to try it a second time, you have a loss. Those are the rules. And this continues over and over and over and over and over like this. As you can see how we can use the trend lines, how it was all improvised. I mean, I didn't expect to make this video so long. It all started from a previous video where I was showing you how to distinguish between original and fresh levels, and then I just made another video doing all this. So this is how you have to be patient, how you can use the trend lines to assess direction, and how the higher time frames will tell you what you can do or you cannot do. There are very strict rules as to what to do now. So now this is the euro. This is what's happening now. What has been happening since we reached that monthly area and we started rebounding from this monthly area. So we stopped at this over here, and now we could continue, but it will take us an hour more. So this is the way it works. Okay, hope that is useful for you. Thanks a lot.